Hi everyone, I'm the Tax Pro, and today is day 8 of our 90 days to taxes. In this series, I am getting new business owners or people who are disorganized, organized, ready to file their taxes, confident in the deductions and the credits they're claiming, and ready to go for tax season. So let's talk about what expenses we can and cannot deduct. And this is kind of a very confusing topic for a lot of small business owners. So when it comes to what you can deduct, the Internal Revenue Code states that businesses can deduct ordinary and necessary business expenses, expenses that are utilized in a business, except for certain disallowed expenses. And that is a very, very broad categorization. Very confusing. What is considered ordinary and necessary? Who determines what those ordinary and necessary expenses are? And how do we make sure that we are deducting things that will be allowed in an audit? So when it comes to ordinary and necessary, I want you to think of a couple of different things there. So when it comes to ordinary, we're looking at, is this something that is standard in your industry? Is this something that is going to be, kind of congruent throughout your industry? Is another company that does something similar to you, are they going to be deducting those expenses? Are they going to be incurring those expenses? For example, um, if you own a restaurant, you probably do not need a boat. And you might laugh at that, but I have a lot of small business owners that'll say, well, I have this boat and I'm going to use it for advertising, and so therefore can I deduct it? And it's like, well, no. If it's not, like, if most businesses aren't utilizing a boat in your industry, it's probably unlikely you're going to be able to deduct the boat. Now, if you put a graphic on your boat as an advertisement, maybe the cost of that particular graphic we could justify as an advertising cost, but it's not really ordinary or necessary for you to have a boat in your business if you have nothing to do with the water. Like if you're just a restaurant, you're not a waterfront restaurant that serves meals and like charges for a boat ride, they're probably not going to bite, right? So is it ordinary in your industry? And there are certain circumstances in which you could argue that just because it's not standard in your industry doesn't mean that it isn't necessary in your business. For example, if you are in a specific industry, but you are really tailoring to the elite income earners that utilize that particular industry. So, for example, maybe you are in a consulting company, and standard in your industry is not necessarily something that you're doing. You are catering to an elite level of clients, and you are getting those elite clients. Your income is reflecting that you are getting those elite clients. You could potentially justify a more expensive car to drive those clients around in. Now, I would want to see that those clients are actually being driven in that vehicle, that they are actually seeing the vehicle, getting in the vehicle, going places in that vehicle. If you're like, yeah, I need to be able to drive, this really expensive $150,000 car, but I meet all my clients virtually, I'm going to say, well, what does the car have to do with it? That's what the IRS is going to ask. Well, okay, you have an elite set of clients, but if they're never seeing the vehicle, why is the vehicle necessary in your business to attract those clients, right? So ordinary and necessary, except when the IRS says, no, you can't deduct those. So what does the IRS say that you can't deduct? Let's kind of take a look. This is, before I start, I should mention, this is publication 334. So I like to introduce these IRS publications. I find them helpful. These publications are great places to start your research, and they're free online on the IRS website. However, you cannot rely on them in the event of an audit, okay? So these do not have what we call authority, and taxpayers relying on publications, it doesn't hold up in tax court, Okay, so you can't rely on these in the event of an audit, but they are phenomenal places to start your research. So publication 334, this is the tax guide for small businesses. And this specifically says for individuals who use Schedule C. So this is going to be tailored towards Schedule C sole proprietors. But if you're a partnership or an S Corp or a C Corp, some of this information is going to be relevant as well. So it's going to give you some information about, if you need information about corporations, visit publication 542. If you need information about farming, pub 225. So it's got some good information here. One of the points that I really like in this particular publication is this area, expenses you cannot deduct. So these are expenses that specifically you are not permitted to deduct in your business based on the Internal Revenue Code. Bribes and kickbacks. So this falls into an illegal category. Any expenses that are illegal, you cannot deduct. And a lot of people laugh at that and they're like, well, I'm not doing anything illegal. But let me kind of give you some examples that might ring true for your business. If you are driving, you have, an employee that is driving and they're driving a company car, they get pulled over and they get a speeding ticket. If your company pays for that speeding ticket, that's an illegal expense. Okay, that was an expense paid because you broke the law or your employee broke the law. If you get a parking ticket, you broke the law. That is a penalty. It is illegal. It's something that you did illegally or your employee did illegally. You can't deduct that. Okay, so some kind of things that happen kind of commonly in businesses that you might not think of as being illegal, but technically they are, and you can't deduct those expenses. Certain industries are considered illegal at a federal level or a state level, and therefore the expenses associated with those industries come under scrutiny and may fall under that illegal category. For example, the cannabis industry. If you are in the cannabis industry, you are going to have a hard time taking all of your expenses and deducting them on your tax return because cannabis is not legal. Recreational cannabis is not legal on all federal state levels, okay? So because of that, the cannabis industry has certain expenses that they cannot deduct because that industry, the practice of what they're doing is considered illegal, okay? The IRS actually has regulations that if you are doing illegal activities, you are required to claim that income and pay tax on it, but you're not necessarily required to or allowed to deduct all those expenses. For example, if you're a drug dealer, you're technically required to claim that income. There's actually some really interesting cases where the IRS has actually been the kind of leading government agency to take down large drug dealers. So you are actually required to pay the income on that illegal income, or the income tax on that illegal income, but you're not allowed to take certain deductions. So anything illegal, so bribes and kickbacks right here. Charitable contributions are kind of a different beast. Charitable contributions are not deductible for sole proprietorships, partnerships, or S corporations. If you pay charitable contributions from one of those types of companies, that charitable contribution actually flows through to the business owner or owner's personal tax return. Okay, I'm not going to get in exactly how that works right now. I'll go over a charitable contribution video in a different video, but charitable contributions are a different beast. C corporations can deduct charitable contributions with some limitations, but sole proprietorships, partnerships, and S corporations, if they are paying charitable contributions, so if that business is contributing to a charity, that charitable contribution actually flows onto the owner's personal tax return, and it doesn't touch the actual business return as a deduction to come to taxable income for that particular business. Charitable contributions are a different beast. Okay, demolition expenses or losses, this is kind of dependent. Notice that this says you usually cannot deduct the following as business expenses. Demolition expenses may be deductible in certain circumstances, such as preparing a site for a building or something along those lines. You would have to have specific circumstances would determine whether or not that's deductible. Dues to business, social, athletic, luncheon, sporting, airline, or hotel clubs. If you have an athletic club that you like to go to and that's how you market, probably not deductible, okay? Entertainment expenses. Entertainment has been done with. Um, the Tax Cuts and Jobs Act of 2017 said no more entertainment deductible in businesses. Entertainment is going to be something like, I'm taking a client out, I'm entertaining them at like a sporting game or something along those lines. Those tickets to that sporting game are considered entertainment, and that is no longer deductible. It is a business expense that you would put on your books, but you don't get to deduct it for tax purposes. There are certain expenses that we back out for tax purposes. Now, if you are in the business of providing entertainment, so like I am in the business of planning and putting on parties, and part of what I am providing is a party environment where I am hiring entertainers for these parties. Maybe I get paid to put on weddings, or I get paid to put on birthday parties or corporate events. And part of what I do is I kind of am an intermediary, so to speak. My client pays me to procure entertainment for that event. That is different, okay? Because that is what I am doing as a business, right? That looks different than me taking my clients out to sporting events as, you know, like a thank you for doing business with me or something along those lines. If you're in the business of providing entertainment, you can deduct the cost that you incur to provide the entertainment you are getting paid to provide, okay? Improvements to real or tangible personal property. So if this is property that you are improving for a business purpose, this may be deductible. We would have to look at specific circumstances. For example, if I go and I purchase a vehicle and then that vehicle needs to be set up with specific tool racks, or maybe I am transporting animals and I have to have specific crates put into that particular vehicle, that would be a different story. But if you're just improving your personal property that you are using for personal purposes, then that's not deductible. Lobbying expenses, so this gets a little bit complicated, but if you are, you know, paying towards some sort of political fund, generally that's not deductible. And some of these like bribes and kickbacks and lobbying, it's also going to depend on where you're paying those. For example, if I go into a foreign country to do business and it is standard in that country to pay bribes or kickbacks or something along those lines, that may end up falling into a deductible category. A lot of these you have to look at circumstances. Oh, here we go. Penalties and fines you pay to a government agency because you broke the law. Again, the speeding ticket. Personal living and family expenses. Anything that is not business related, you're not deducting on a business return. Okay? My personal living expenses are not deductible to my business because that's personal. Okay? Just because you're self-employed doesn't mean all of a sudden you get to deduct personal expenses. Now, if you are filing your individual tax return and you're itemizing on a Schedule A and you say, well, I should be able to deduct my property taxes on the Schedule A, of course. You just can't deduct it on the business portion of your tax return, okay? So like on your Schedule C or something along those lines. Political contributions and settlements or payments related to sexual harassment, sexual abuse, something along those lines. You also can't deduct attorney fees related to those sort of settlements. So these are items that you cannot deduct. The biggest ones that you're going to come across are going to be entertainment. Charitable contributions need to have a separate way to kind of deduct those. And then illegal activities. So things like you had a speeding ticket or a parking ticket. And then personal living and family expenses. You can't deduct those. One of the things that is not on here is meals. Meals are not 100% deductible. Meals are kind of a different beast. I'm going to have a whole entire video specifically dedicated to how you deduct meals in your business. Meals are a little bit different in that we can't always deduct the full amount of the meal, and meals fall into different categories. So we may have meals that we take a potential client out to lunch to discuss what we could potentially do for their business, or discuss a quote that we've provided them. That's going to be different in terms of deductibility than I am putting on a luncheon for all of my employees to sit down. We need to go over a specific skill set or a new product that we're introducing or a new set of services. Like we're going to host a training, And part of that training, we're just going to do it over lunch, and we're going to provide lunch for our employees. That looks a little bit different. So there's different types of meals. Meals in general are not 100% deductible, and I will cover that in a different video. So to summarize, things that you absolutely just cannot deduct in your business are going to be personal expenses. If you have, personal, family, living expenses, those are not deductible on your tax return. If you break the law doing things like speeding or having a parking ticket, you cannot deduct that on your tax return. If you have entertainment, like you have taken clients out to see a show or to a sporting event, the cost of those tickets is not going to be deductible. And then charitable contributions are different in the way that we can deduct them. Generally, they flow through onto the business owner's tax return. Now, when I say charitable contributions, I also want to clarify. Charitable contributions, if you are donating to a charity, but you are getting advertising in return, the value of that advertising can go as an advertising expense. Okay, so if I am going to go and donate to this charity, and I'm going to donate $1,000 through my business, and as part of that donation, they're going to say, okay, you're going to get an ad in our newsletter, and we generally charge $100 for that ad. I would be able to deduct $100 in advertising expense, and then the other $900 would be considered a charitable contribution, and then that would flow through onto my personal tax return if my business is taxed as a sole proprietorship, a partnership, or an S corporation. So hopefully that was helpful. If you have any questions, please let me know. If this was helpful, I would appreciate it if you would like and subscribe, and I will see you guys tomorrow.